Y'all, I've been noticing that Navy Fed has been denying people with credit scores over 700. I'm talking about even in the 800s. They've been denying people for credit limit increases, for loans, and all kind of stuff. So, guys, we got to talk about it. We got to talk about what's going on with the House of High Limits today in today's video. So let's go ahead and let's get into it. My name is Starr Carter. If this is your first time, I want to welcome you back to my channel. On this channel, I talk personal finance and all the other stuff that's going on out here in the financial streets. So, guys, please make sure that you are subscribing to the channel. Hit that subscribe button for me. Make sure you're liking the video and leaving me comments. That way, this video get pushed out to other people that might want to see this content as well. I do appreciate all the love, and I also want to tell you guys I appreciate the ones that has already joined the Credit Ready program. If you haven't already joined, please scan the QR code over here somewhere. And if you don't want to scan the code, you can go to my website at starcarter.com, and it'll also be the link down in the description box. The Credit Ready program is completely free. Inside of there, we have a bunch of free resources in there, as well as a course. Tomorrow, August the 17th, I will be going live inside of the group at 5 p.m. Eastern time. So to answer any questions, and I also go over the things that we're going to be doing inside of the Credit Ready program. Again, it is completely free for all the resources, for the course, for the lives that I'm going to be doing within the group. And it will be free until the end of this year, December 31st, 2025, and January the 1st. That's when I will actually put a price tag on it. But if you go ahead and join the Credit Ready program now, while it's free, you will still be in the free membership block even when I turn on the monetization. So you will be free forever. So go ahead and join now before it gets crowded in there, or before people, before I start charging, because it's going to be great. Starting next month, which I'm going to be talking about this tomorrow in the live, starting next month, we're going to go ahead and go over some of the different course materials. We're going to actually set ourselves up for excellent financial 2026. Okay, guys? So go ahead and join, scan the QR code, or go to my website, starcar.com, or in the description box of this video. I do appreciate it. Let's get into today's content. So other than looking at TikToks, I love to read Reddit forums, because that's where a lot of the stuff be going down. People be telling what's going on in these financial streets. So I follow several different financial apps. Well, I can say apps, what they call it, subreddits or Reddits in the Reddit app. So I follow like the banks, I follow the credit unions, I follow the buy now pay later groups, I follow the what is it, the cash advances groups and stuff. So that's where I get a lot of the stuff that I talk about, because I be seeing where the people be talking about their bad experiences and their good experiences. So it's not always one-sided. But I just noticed a trend of people that have been getting denied and have been bringing it to the actual Navy Fed forum about them getting denied. So one that in particularly that sparked my interest was this one right here. So this is the one that I saw right here, that they posted their denial letter. And and as I told you guys in one of my other videos, it's called Don't Get Denied or something like that. The denial reasons or whatever. I'll link it in the cards above. I can't remember exactly what the title was, but it was like Don't Get Denied or something like that. I did it I want to say about 2 years ago, when I first joined Navy Fed. And so this is a denial letter that I see that they got from Navy Fed. And what was very interesting to me is, okay, now, first of all, this is a HELOC that they was applying for, which is a home equity line of credit. So they have a home and they was trying, to get a line of credit based on their equity in their home. So that's just the context, right? Notice on here that they pulled from Equifax. So maybe Equifax is who they pull for their home loans, or they might be where, whenever you're applying for a home, they usually pull from all three. And that's usually FICO 2, 4, and 5, if I'm not mistaken. If I am mistaken, please make sure that you let me know in the comments. But I think they pull on the mortgage FICO score 2, 4, and 5 to get that. And so here is the Equifax, and it says that we also obtain your credit score from this consumer reporting agency, Equifax, and used it in making our credit decision. Your credit score is the number that reflects the information in your credit report. Your credit score can change depending on how the information in your credit report changes. Your credit score 804. date was July the 6th of this year. Score ranges, of course, from 300 to 850. And here's the key factors of why they denied his and it was a guy, and I just didn't put his information here, but and the key factors that they said that reason why they denied him was the length of time of revolving accounts have been established. That's number one. Proportion of loan balances to loan amounts is too high. Time since most recent account opening is too short. Too many accounts with balances. Number of inquiries adversely affected the score, but not significantly. Okay, so let's break this down. So that's what I be trying to tell you guys. Sometimes it's not just good enough to have a good credit score. And I think a lot of times we want to focus on just the credit score, because I want to show you something else too. Um, Before we break this one down, I want to show you one other thing. Let me add this one to the stage. So somebody right here in this one, she got denied for a credit limit increase, and somebody told her to fix the reasons in your denial letter and try again. It won't do any good to try before you take care of those reasons. And just like I was just showing you in this other one, they do break down the reasons whenever you get denied. So this person right here in the comments says, I have an Amex with a 20K limit, 763 Equifax, and high income, and I was denied a credit limit increase in 93 days. So a lot of people like to go by that 91.3 or whatever that is. I never paid that any attention, but I know some people that swear by, you can apply for a credit limit increase so many days or whatever that is. Okay. And they do whatever they feel like that day. So they got denied a credit limit increase. Having a pretty, that's a really good credit score, 763. That's really good. Anything over 750, you pretty much is in the 800. They kind of like it. Really being in 800 is just more of saying, hey, I'm in 800. But usually the closer you get to 800, you will still get the same rate as somebody that's in the 800s, right? So 763 is pretty good. And um and so and they were denied a credit limit increase, so they probably would get a letter or an email letting them know why they were denied. Here's another denial letter that I had seen, and this one right here is more or less because they have a very low score, internal score with Navy Federal. And the date was on 8/7, so this is fairly recent. Key factors that adversely affected your Navy Federal credit score: amount of non-mortgage account balances paid down in the last 24 months. Months since the oldest revolving trade open, balance status of Navy Federal accounts, months since oldest auto trade open, number of inquiries on credit bureau report. I want to talk about this one too, but we're gonna go back to the other one first before I talk about this one, to try to give you guys some context on what do a lot of these denials mean, especially the ones that are not just straightforward. So let's take a look at this one again with this person, this man who's got an 804. So he was just like, I don't understand. Like, he was like straight up in the forum saying, I don't understand why I got denied. I got an 804. And we got to understand that it's more than just your credit score that is factored in when they're looking at your credit, whenever your credit is being run, especially with a HELOC. What he's trying to do, a HELOC is a part of your home. You can lose your home if you default on a HELOC, right? So it's a little bit more extensive. So I just don't want people, but any loan, especially if you're dealing with a bank or a credit union, they are going to look at more than just the credit score. They're going to look at what is it that makes your credit score, because you can have an 804 and just be an authorized user on somebody's card that's had their card for a long time, and you can just have a thin credit profile. Your credit profile could just be really thin. And that's why you got an 804, you got an 800, because you don't have any other credit, and somebody put you as an authorized user on their credit. And because they've been very responsible with their card, paid it on time, keep the utilization low when it's reporting to the credit bureaus. And so you just inherit their good credit habits, but you haven't established any credit your actual self. So that's another thing. So it's some factors in here that we may not know specifically, because we don't know what made up that 804. But based on the information that Navy Fed has provided, it looks like he may have a thin credit profile. So let's take a look at this together. So the very first one, the length of time revolving accounts have been established. So that means that he's got some fairly new credit cards or some other type of line of credit. Could be a overdraft protection, could be a personal line of credit. Like I said, 9 times out of 10 is probably a credit card. So he's probably opened up a few credit cards. So it says length of time revolving accounts has been established. So less than 2 years, probably less than a year if I really had to guess. So he's got that's going against him, right? Proportion of loan balances to loan amounts is too high. So he's got some fairly new loans or either loans that are not being paid down in a rate. And sometimes you see that with student loans. Like a lot of student loans have been in forbearance, especially after they were, back into payment status after the pandemic. And right here going on, there's a lot of crazy stuff going on with the student loans right now with this new administration. So it could be student loans. He didn't actually say, but sometimes when you have student loans for a while and the balances or where they are, that they're not going down, or you could have personal loans where the interest rate is so high that even though you're paying on it, it's not moving down the principal. And so that's another thing that counts into your credit utilization. A lot of people don't know that. And I talked about this in a credit breakdown video that I did before that I'll link. It not only looks at the utilization of your credit spending on your credit cards and your lines of credit, but it also looks at if those loan balances are coming down. When you buy a car, your car is set, for however many months, 60 months, whatever. That balance as you're making those payments, it should eventually start coming down. Maybe at front, it might not come down that much, but it should be coming down. And that's what your credit report is, that FICO score and that FICO module is looking at. Is those reports coming down? I mean, is those balances, I meant to say, coming down? And so that's what that is. It says time since most recent account opening is too short. So he's been doing a lot of opening up new accounts. Hence, the length of time revolving accounts have been established. So he must have been opening up credit cards more than likely. And saying time since most recent accounts opening is too short. So he's opening up a lot of accounts. That right there can go against you. And that's why I was telling you guys about when you got these buy now, pay later things that's going to start reporting. If they're not already reporting, that is going to harm you when you're getting all these new installment loans and stuff like that. That is a thing that it can actually hurt you. Not only would it hurt your average age of credit, but it looks like you're shopping for a lot of credit. And that screams, I might be a risk, because your credit score don't always tell the story. Like I said, your credit score don't always tell the story. They're gonna look at how recent these new lines of credit has been on your credit report, and your credit report will tell them, okay, this is the date that this account was open. This is the date this account was open, right? All right, and then so it says um too many accounts with balances. So he's got is either student loans, but he might have other loans. And so that can also be buy now, pay later stuff. If they start reporting all those little installments, that can also hurt you because that's too many accounts with balances. Not saying that that's what this person has, but I'm just saying that's the type of things that you're going to start seeing when people are getting denied. Because if you got a bunch of little installment loans that you have, that you're paying 4 to 6 weeks little payments on, and they start reporting those to your credit report. Like I was saying, it does not look good. And I've already talked about that too in the video. So if that's not the case, then he must got a bunch of installment loans or whatever, maybe a little small installment loans. I don't know, but too many accounts with balances. Also, it could be credit cards because he's got a length of time of revolving. So he may have balances on those credit cards. A lot of times when you have good credit like he has, he probably doesn't get denied very often. And so he's probably been running up a bag of getting cards. And he probably was taking advantages of balance transfer cards. So he might have been transferring some balances and, running up the utilization on those cards. And that could be a factor as well. Right. Number of inquiries adversely affected the score, but not significantly. So he's got a lot of inquiries. All right. It said that it adversely affected the score, but not significantly. So when your score is really, really high, like his is, and and you do inquiries, like you do a lot of inquiries, and if you do them within like the same window of time, it doesn't affect your credit score as it would somebody with a lower credit score. Now, if you got a credit score below a 700 and you do a lot of inquiries, you will take a harder hit than somebody like him that has an 800. He might only lost like, 3 or 4 points per account versus somebody like that has a lower credit score. You might take 10 to 12 points per new account. Or inquiry. So that right there does make a difference as well. So that's why this person right here was denied, even though he has a really good credit score. He was denied because of those reasons. So if you have any of those things going on and you're trying to either join Navy Fed or you're trying to, or you're looking at maybe trying to do something else with Navy Fed, like getting a credit limit increase. And if you got any of those factors going on, then 9 times out of 10, you're going to get denied because those are some of the things that they're looking for, right? When they're trying to approve you. So you just want to make sure that you have your credit, even if you don't have the best credit score, because I've seen people that have had credit in the 600s that's gotten approved for high limit credit cards. I've seen them get approved for credit limit increases, but because they didn't have none of those factors, they was approved. So the credit score really doesn't matter. It's what's going on within the credit report itself, right? All right, so let's look at this other letter that I was telling you guys about. So I'm gonna add that one. So we already know that they got a very low credit score. Now, when I read their thing, they said that they have been a member of Navy Fed since like May of this year. They had been a member since May of this year. So it wasn't like they was trying to do anything, right off the top, of getting the credit card that they had. They even did the pledge loan and all that. And I think that pledge loan play that everybody has been wearing out, paying it off and like 90% of it. I just think that that's dead in the water because so many people has done it. And so when I look at this part right here where it says balance status of Navy federal accounts and amount of non-mortgage account balances paid down in the last 24 months, they probably have run that play too much. You know what I'm saying? Probably done did too many Navy Fed pledge loans or whatever. Probably got several pledge loans out there that they're doing, and said the balance styles of Navy federal accounts. You keep constantly running that play is a really dead play to me. I would focus more on using the account more, having direct deposit coming into the account, using the account more as far as, if you want to get a certificate, putting money in there, letting that money grow in certificates, putting money into your savings accounts and that kind of thing. But I really and truly think that the pledge loan play has really played out with them, in my opinion. Y'all let me know in the comments. And it also say months since oldest revolving trade open. So very, very probably got a very thin profile. So you want to make sure that when you're opening these trade accounts that they are aging, at least 6 months, 2 years, you want your credit profile to be strong, at least a good strong 2 years. That's what you want on your credit profile with on-time payments. So months since oldest revolving trade open, it's probably like they have too many in a short period of time. Because look at this number of inquiries on credit bureau report, and I'm gonna tell you right now, Navy Fed don't want to see more than like 2 inquiries on your credit report, whether that's TransUnion. We just saw it. Experian, I mean not Experian, Equifax. They don't want to see a whole bunch of inquiries because, and don't nobody wants to see a whole bunch of inquiries because that screams I'm a risk. I'm out here shopping for credit. I'm shopping for credit. And so nobody wants to take that risk. So you need to let your credit chill out. Some people like to say, well, you can pull every 6 months. No, you don't want to do that. You only want to apply for credit that you really need for whatever reason. I did a video about a year or so ago about credit goals. You need to have credit goals when it comes to your credit, especially if you're trying to get a good interest rate on a car eventually. If you're trying to buy a home, you have to be strategic when it comes to using your credit and not just applying for everything, because those inquiries do get racked up on your credit report. And a lot of people are like, well, you could just dispute those off. Disputing is not for removing inquiries. Disputing is for fraudulent stuff or stuff that's not supposed to be on there, that's being reported inaccurately. Okay. If you dispute an inquiry and like say you applied for a credit card, say you apply for a credit card with Capital One and they denied you and then you dispute it, well, you applied for the application and they had to pull your credit. And so if you're disputing that you didn't do it, then that's fraud. So you have to, like I always tell you guys, you have to use your critical thinking skills. That's fraud. If you didn't do it, somebody else did it. That's fraud, right? So, dispute inquiries is not the way to do that. You just need to be more strategic in the credit that you apply for, and then you also need to get your credit cleaned up enough that that will decrease the likelihood that you will get denied for credit. That's why I call my program, my members, the credit ready program. That's why I call it that, because you got to be ready when credit is needed. You got to make sure that you have your credit report in tip top shape in order to do those things. Because if not, you're going to get denial letters like this, because either from a lack of understanding or not listening to the right people that's going to tell you the truth when it comes to credit. So make sure that you guys are taking these right here into consideration when it comes to denials. And there's like a whole list of reasons that people that you can get credit denials. This letter and the other letter that I pulled up on the screen, these are just examples, but there's a whole list of reasons why banks or credit unions will not extend credit to you. And I let me see if I can show you that list really quick, and then we're going to get off this video so it doesn't be too long. Now there was a bunch of them that popped up, but this one right here was very interesting to me. So that's why I just picked this one. This is Farm Bureau Insurance Reason Code List. And I tell you guys all the time, it's not just credit that are looking at your credit. Like lenders, but your insurance when you're trying to apply for apartment and utilities and stuff like that, they're looking at reasons to give you a higher rate for your insurance and for different things like that, whether or not you're going to have to make a deposit on that first apartment or deposit on your utilities. All that kind of stuff can also play a factor in when it comes to your credit score or your credit profile, that is. So on this one right here, it's like reason code 101, number of derogatory republic record items, number of inquiries for transaction initiated by the consumer in the last 6 months, length of time of the accounts have been established. This is 103. And what was very interesting that I just saw, it said, how does this affect my insurance risk score? Insurance industry research shows that consumers with longer experience in managing their credit accounts have fewer insurance losses. Listen to that. What can I do to improve this aspect of my score? As your credit history ages, the score may improve based on this factor. To avoid lowering this aspect of your score, consider keeping your oldest accounts active and only open new accounts when needed. So that's what I was just telling you guys, that you got to be more strategic with your credit. It's not about quantity of credit, it's the quality of credit. You can have a ton of accounts and it just be a bunch of trash accounts that's going to get you denied, right? You want to have good quality credit with a credit union or with a bank that you have established a really good relationship with them, and you've had those credit cards for umpteen years. Like I have with I'm in South Carolina, so I have a credit card with State Credit Union that I've had with them since 2011. Right. So that's a very good, solid, over 10 years that I've had that credit card. And right now, my length of credit history is over 15 years. And I'm just graduated into the 800 club, and it takes you a while to get there because those accounts have to age with great payment history. I've never been late on that credit card in over 10 years. I've never had a late payment, and I've had that card since 2011. Even when I wasn't doing well with my credit, as far as I told you guys about my credit addiction, and I was in a lot of debt with credit cards one time. And even then, I always made sure that I paid the minimum payment, even if it wasn't but $20 or $25, whatever that minimum payment was, I was paying it. Now I might have turned right back around and used it because I didn't have any money, but I always made sure I made that payment. So those things really do matter. And so this is a really good list. It's like 29 pages long of a number of open installment bank accounts, number of open retail accounts, number of vehicle related accounts with the current past due amount. They got a bunch of codes on here. And if you look up the credit bureaus and stuff, they'll show you a lot of the ones that they what they code on their actual the credit reports itself. So these are good to look at. And all you got to do is Google search, but that'll tell you what the lenders are looking for. Even the insurance agencies are looking at this stuff. That's what I'm saying. That's why I pulled this one up, because it's not just the lenders. Excuse me, y'all. It's not just the lenders. It's other people as well that's looking at this information to try to determine if they can charge you more. Right, about your credit worth. They want to charge you more. That's how they make money. They don't make money off the people with really good credit profiles. They make money off the subprime credit lenders, and they make money off the people that have all those different things. Even that guy with the 804, they can still give him a sucky butt interest rate because of all those different factors. Because of these factors, if they had approved him, they still can give him a bad rate, even though he's got an 804, because it's not clean. He doesn't have a clean credit report. He don't. And so they can still, if they wanted to, they can still get him. They can still get him. Okay. So this dude was denied a HELOC because of that. And he probably was trying to, and in my honest opinion, he probably was trying to get that HELOC to pay some of that stuff down. Some of the length of the time the revolving account's been established. A proportion of loan bounces to amounts is too high. He probably was getting that HELOC to pay some of this stuff down. Was probably trying to do a debt consolidation. That's what it looks like, in my opinion, guys. Y'all let me know in the comments what you think on this topic today. And I really do appreciate you guys. Again, make sure that you scan the QR code and join the Credit Ready program if you want to have more in-depth conversations with me one-on-one in our group live. Again, tomorrow is going to be our first one, August the 17th. If you see this after August the 17th, make sure that you have joined so that you can be a part of the September live, where I go live again with the group. I will be doing that every single month, listening to you guys, answering questions. That'll be our one-on-one time outside of the YouTube channel. So again, I do appreciate it. And it is completely free, again, until the end of this year. I do appreciate all the love. Again, let me know what y'all feel about this video in the comments. Have y'all got denied any type of credit limit increase or any new loan or anything with Navy Fed recently? Let me know in the comments and let's figure this out. I appreciate your love. Thank you again. Y'all have a great one.